welcome to Get Paid for Your Pad, the definitive show on Airbnb hosting, featuring the best advice on how to maximize profits from your Airbnb listing, as well as real-life experiences from Airbnb hosts all over the world. Welcome.
Get paid for your pad. Get paid for your pad. Get paid for your pad.
Well, it's almost that time of the year again. It's April, and we have to file our taxes. Now, I don't know much about taxes, especially not US taxes, but I know somebody who is an expert on US taxes, and specifically for people who work in the sharing economy and specifically Airbnb hosts. So today I want to welcome to the show Miguel. Miguel, how's it going?
It's going good. Thanks for having me on, Jasper.
Of course. I'm interested to hear your advice on the taxes. I know recently in the US a bunch of stuff changed as Trump implemented some tax cuts, I believe.
Yeah. For those that say that Trump did it, I mean, I would say that there's a lot of Congress people who know a lot about tax that probably did most of the work, if not, all the work. But that's certainly correct. Appreciate that.
All right, for no credit for Mr. Trump then. But anyway, a lot of Airbnb hosts have questions around how to file their taxes, and so I wanted to go over first of all sort of the basics. What does every Airbnb host need to be aware of, and then I also would like to discuss some questions that people have asked on a blog post that I wrote on getpaidforyourpad.com. So how's that sound?
That sounds fair.
Awesome. So let's kick it off. Airbnb taxes 101. What are the most important stuff that people need to know?
Yeah, I think the most important thing, Jasper, is to remind everyone to breathe. I think oftentimes when I get a call from a frantic host, the context is usually, okay, I've figured out how to make money. I've figured out my pricing. I've read these great blogs like Get Paid for Your Pad, but now I've made money, and like, how the heck do I pay taxes on it? So I think that the number one thing is just to know that there is a very kind of basic process here in the U.S. That although there are nuances around Airbnb, it's generally the same. So, filing annually and reporting on that income is number one. And then what folks might not know is that you also have a quarterly requirement if you make a certain amount. So those are kind of the two overarching points on tax requirements. And of course, there's a lot of details that kind of go under that. And I'll just kind of continue here. So the annual filing, which we all know about, is coming up here. It's due April 17th this year. And what that means for Airbnb hosts is that you're going to have to file a profit and loss sheet on the income received from the platform, be it Airbnb or VRBO or HomeAway, what have you. But you also get to claim deductions against that. And by the way, you should report on that, and you should get credit for those deductions, because what might happen if you don't report and somehow down the road the IRS or another taxing agency identifies that income, they're not going to give you the credit for those deductions. So, you want to make sure you're getting your income and your deductions on an annual basis at very minimum.
And what's this thing called Schedule C or Schedule E?
Yeah. And so that's a question of, okay, fine, I've got my income, I've got my deductions. Now, where do I put them? Traditionally, kind of in the Airbnb, pre-home sharing world, you would typically expect a rental property to be on a Schedule E. And there are some very important characteristics about that Schedule E, because there's less tax on income on a Schedule E. But to be able to qualify for a Schedule E, the income has to be passive. So meaning this is the world where, Jasper, you might own a property in the Bahamas, because I know that you do, where you just kind of set it and forget it, and someone lives there maybe long term. You don't need to manage it at all. That's the world under which the Schedule E was made for, and what Congress said is you don't need to pay self-employment taxes on it because it's not an active business. The Schedule C, in contrast, is for an active business. So now, in the world of the Airbnbs and the world of, dressing up your listing to make it attractive, there's advertising involved, there's managing hosts. I've been to places where the hosts had kind of, offered, some kind of activity during the day to get to know the area, so we live now in the world where these rentals are becoming active, and what the IRS has come out in certain events has said, hey, this is not a passive activity, and that's where you file on the Schedule C. So I just have to say that it's a hotly contested issue, not just not just me on this side, and not just but also other preparers and professionals are kind of having the same discussion. But the reality is this: the Schedule C has an additional tax on it, just like any self-employment would. So, these are payroll taxes. It's an extra 15%. And I have a lot of hosts who come to me and say, well, Miguel, I don't want to pay that extra percent. And I always say, well, look, there's a clear fact pattern that the IRS has kind of gone after to recharacterize income from one to the other and assessing penalties. So I don't share that to scare anybody, and I hope that's all making sense. The point is that that's a discussion that you'll want to have with your professional based on your specific fact pattern. You're going to want to think about whether or not this can qualify as passive or if a Schedule C makes sense. And then I'll just wrap that point up, Jasper, by saying that from a deduction standpoint, so if you're in a loss, a Schedule C is much better from a tax standpoint than a Schedule E loss, because if you have a loss on a Schedule C business, you can take that loss and you can offset your wages. So, and what I mean by that is that, if you made, I don't know, $100,000 and you have a $10,000 loss on a Schedule C, what you can do on your tax form when you report it on a Schedule C is you can say, wait a minute, you taxed me on 100 through my regular job, but actually I only made 90. So then you can get back whatever was taxed between 90 and 100. So anyway, I'll just pause there because I know I've been rambling on here on something that's very tax specific.
I know when you have a tax question, there's almost never an easy answer.
Absolutely.
And that's what provides you with your business, I guess.
No, that's correct. I mean, I think everyone, I think, the world we live in today, the knowledge is out there, and I think that's great. I think though that what's often missed is that, there are exceptions to every general rule and piece of advice. So I think even as your listeners are listening here, just note that there are exceptions to some of these general guidelines, and you might be that exception. And the best way to figure that out is just to get feedback from somebody that, does this a lot.
Awesome. So just to finalize this, the Schedule C, Schedule E thing, I was wondering, in a situation that I had where I had an Airbnb manager sort of managing my Airbnb listing, I was still involved as well, because I was like updating the listing, I was communicating with my guests, I was accepting and bookings and stuff. So would that be considered a Schedule E or Schedule C?
So, and then, I guess you've got a property manager involved there too?
Well, I only had one listing. So basically my cleaner was basically my property manager.
Yeah. Well, what I would say is that there have been, cases where we've, lightly discussed with an IRS agent where they just had questions, where, they kind of heard that same fact pattern that you just said, which is very common, right? I've got one listing, I manage it, there's some things online. And they took the view that it was active because there was, marketing involved and, high turnover, right? So it's the very nature of constantly having to market and advertise and engage, is a selling process that you wouldn't consider to be a passive activity. So I'll just share that tidbit.
Right. Got it. Okay. Cool. Let's move on to another topic. Deductible expenses. I mean, that's that's the fun part of doing the taxes, right? Like deducting everything.
Yeah. It's like, all right, here's our starting point. Let's get it down.
So what kind of things can you deduct?
Yeah. So, I mean, the typical things will always be, if it's a rent to rent arrangement, you're going to figure out, okay, it's going to be rent, utilities. If you own your home, you're going to deduct it a little differently. You're going to look at, you can't deduct the mortgage, but you can deduct mortgage interest, and you can depreciate the value of the property that is related to the business. So I think the big point here is that there's always going to be direct expenses. So, even if you're renting out your basement, there are expenses that you don't need to figure out, are they business or are they personal, right? So if you've bought linens for the rental area, if you've bought furniture, if you've done all these things that are specifically for your unit, that's what we call a direct expense. And then the second category are the indirect expenses. These are things that are for the benefit of everyone and everything in the house. And now you've got to figure out, okay, what percentage of, the total rent, if I live here too, should be assigned to the business. We usually call that saying, hey, look, we've got a pie. We've got a pie of expenses, and the goal is to capture the full pie. And then what we do is we figure out what slice of that is for the business. So that's kind of how we think about those two. And you combine those, and those are your overall deductions. So, some of those things that I think that a lot of Airbnb hosts miss are sometimes, items that are available to guests that, you don't think about. Like, so for example, I have a client who has a wine subscription, and because they have so much wine flowing in their house, they make it available to their guests. So, there was a conversation there. It said, hey, we've got to figure out, what percentage of this, right? Like, we've got to think about, it doesn't have to be exact, but we've got to, deduct some of that. And then the other things too, of course, are your, Netflix, your internet, subscriptions in your home. If you, for some reason, have fresh flower. I have a client in New York City who puts fresh flowers in the house every time she has a guest. And flowers are expensive. I had no idea how expensive flowers can be, but it's kind of her personal touch, part of her personal brand. And she only does it for guests. So that turned out to be a nice little deduction for her as well.
Very cool. So there's lots of things to deduct. And of course, what's also important is that if you deduct expenses, you want to make sure you have clear documentation of anything you deduct. You want to keep those receipts, etc., because if they ever check on you, then you need those, right?
Yeah. So, the interesting thing is you don't necessarily need the receipt. And I don't want people just taking that and running with it. But I just want to be practical about what happens ultimately when you get audited. Because an IRS agent, is not going to ask you or any company for every single receipt. What they're going to ask for is what the process is. So no matter what, you've got to have a documentation process to note what those expenses are. It could be as simple as going through your banking statements and highlighting, all those flower expenses, for example, right? And documenting that. You only need 4 things to justify a deduction. You need the date, you need the vendor, you need the business purpose, right? And you need the amount. So you can get those from banking statements. But the point is have a process. Don't wait until 3 years down the road when you get a letter asking to explain what, your supplies are, right? You want to be able to just reach into a drawer or into a, Google Drive file and just pull out whatever that documentation is. But that's a good point. But Jasper, do you want to know the number one deduction that hosts miss on that is actually quite fun?
Let me guess. Phone bill?
um, that's not even close.
Okay,
But no,
tell me.
yeah, yeah. Well, definitely the phone bill. Let's include that. But travel. So, if you really, and I know you talk about this, but if you really want to be a good Airbnb host, shouldn't you check out other Airbnbs?
Uh-huh.
You
I,
know, so
I I like where this is going.
yeah, yeah. So look, I mean, there are specific rules around business trips that if you play it right and with the right documentation, you can feel pretty good about having those. So what I mean is this. The rules state that if you work the majority of the time, you can define that as 4 hours every day, and we've done that and tested that in audit, then you can deduct the full cost of the trip. You've got to document what you do those 4 hours a day, right? Call it a Google Sheet, call it a Word document, whatever you want to do. But if you can do that and you can, say and lay out that R&D, Airbnb host research in, you fill in the blank, Charlottesville, Austin, anywhere in the world. I mean, isn't that an argument to say that you're making your own business better? And aren't you really learning how to be a better host and run a better business?
So basically, you can use all your Airbnb income to take a bunch of holidays, and that way you don't have to pay any taxes.
I'm going to rephrase that to say that you can take your Airbnb income to do intensive and wonderful and beautiful travel, which benefits your business, and deduct that. How's that?
Interesting. It's probably better wording. Awesome. Well, that sounds great. I didn't know that. Anyway, let's go to questions.
Sure.
There's a bunch of questions, and let me just start with a very basic one. I think this one will be fairly easy to answer. So the question is, I purchased a home to be used exclusively as an Airbnb. Would I treat this as a rental property or a business? I'm confused. Please help.
So I missed the first part. Did they buy or rent the home?
Yeah, the question is, I purchased a home
Purchase. Yeah.
to be used exclusively as an Airbnb.
Yeah. So my personal view is that sounds like a business, right? And what we would do is we would look at it, in terms of days available, days rented. How is the rental structured? Is it one home for rent? Is it multiple units? That would be part of the conversation. But generally, I will say that when you buy a home, your best deduction is going to be depreciation, which is taking a piece of the purchase price and stretching it out over the life. Okay. So with a home running as Airbnb, what you're going to want to do is I would Schedule C it. It's probably going to be in a loss because you've got such a big depreciable amount, and you can use that loss to offset other earnings. So, there's some gray area, but that's how I would play the rules.
Okay. So if you have purchased your home, and how does it work when you have a mortgage? Let's say you purchase a $200,000 home and you have a $200,000 mortgage. Can you still depreciate it and deduct that?
Yeah. So you depreciate it. You don't write off the mortgage. You do write off the interest from the mortgage as well as the depreciation. So, I know that sounds maybe it sounds a little cloudy, but, your first year, let's just take your example on a $200,000 home. Let's just say that the first year your mortgage payments add up to 10 grand. Because it's early in the mortgage, the majority of that will be pure interest. So, you might not be able to write the full 10 grand, but I'm going to say 7 grand of that is going to be interest. So boom, and you might say, oh, well, I lost 3,000, but no, you've taken that 7 and then you're going to take the value of the home and write off a portion of it. So, and I don't know if anyone wants to know what the math is, but you're going to take, 200, divide it by 27.5, and that's going to be the depreciable value, more or less. And there's exceptions to this, but more or less that number you're going to write off as well. So it's actually going to be better in the first few years than just writing off your mortgage.
Right. And so this 27 and a half years, that's supposedly how long a house lasts for?
Yes, that is the life. That is the idea behind it. But for those listening to this in after this tax season, that number has changed. So Congress changed that with tax reform. It is now. It is not yet. It will be 20 for the years 2018 and on. So, again, if we're looking at 200, that's going to be about 10K per year. So it's going to get a little juicier for those having this kind of arrangement where they're buying to then Airbnb.
So it sounds like you probably don't really have to pay a lot of taxes on your Airbnb business if you're, like if you look at a $200,000 house, you're saying 10 grand from the depreciation. I mean, if you're making like 10% on that 200, that's like 20K, right? And so if you're making 10%, then you can deduct already the 10K, and then you can deduct the 7,000 for your mortgage, and then some phone bills, some utilities, and whatnot. I mean, you end up paying nothing.
Yep, and now you see the strategy.
Okay, well that sounds pretty good to me. All right, let's go for some other questions. Let's see, what else do we have? All right, so here's a question. I would like some clarity on deductions available to hosts renting one bedroom in their personal home. Can I deduct all the expenses of the home, or can I only deduct a percentage of my home? And also, can I deduct auto expenses because I pick up my guests at the airport?
Yeah, well, that's a fair question. So the answer is, you cannot deduct personal expenses ever, right? That's kind of like a golden rule in taxes. So, if you personally live somewhere, there's going to be a part of that you can't fully deduct. So again, we're back to kind of the pie and figuring out what percentage of that is deductible, right? And there's different ways to do it. You can do it. There's reasons why you would do it differently, but you would do some kind of factor based on square footage, and also days available and or days rented, right? So if you rent out half your home the full year, then just generally speaking, half total expenses would be deductible, right? The other half would be yours and personal, so you wouldn't be able to deduct that. But what if you rented out half your home one day out of the year? Can you still deduct half? Well, no, that's when you've got to get a little more sophisticated. So the point on the total home, figure out a process to identify the business percentage, keep it reasonable, document it, put it somewhere where you can pull it out of a drawer 3-4 years from now. And then on the automobile, you're going to want to track the miles that are for business, just the same way you would do it if you were driving for your company, or any example you can think of. You want to track the exact miles from where you leave and where you return and what the reason is. And there's some great apps out there, like Mile IQ, and I won't endorse any products, but just things that clients commonly use to kind of track those things. So yes, those are deductible.
Very cool. That's good to know. Let's see, what else do we have? Okay, so here's a good question. I rent out my rented apartment via Airbnb for more than 15 days. Can I deduct the hotel that I stay at when I'm renting out my apartment? Is that a business expense? So this guy, since he can't stay at his own apartment because he's renting it out, he's going to stay at a hotel, and can he deduct those expenses?
Yeah. I might be inclined to say yes, and let me explain the principles of deduction. So there's two principles in deducting anything. It needs to be ordinary and necessary, right? So ordinary means do others likely do it, right? So if you kind of think about this example, is it possible that when somebody gets booked all of a sudden and they rent out their full home, that they go stay somewhere else with a friend, boyfriend, girlfriend, and maybe those avenues aren't available, so maybe they want to keep their commitment to their host, so they rent a hotel. I would say that, okay, maybe that sounds ordinary, right? And then the second principle is necessary. So does spending that increase your profit potential, right? And in this case, I would certainly reason that canceling a reservation, would decrease your profit potential. So on the flip side, if I want to stay committed to my bookings, then it's necessary for me to go elsewhere. And is it a hotel this time? Okay, sure. But look, that said, if you come to me and you show me your folio from the W or the Ritz-Carlton, now we're kind of going above what's reasonable. So I would just say yes and keep it reasonable.
And there's a follow-up question. Which IRS form do you use for that?
So, you would report this. I mean, that's why I like the Schedule C better, because there are, more options with the Schedule C because you're doing it as a business, right? So on the Schedule C, there is a travel line. There is a travel and lodging line that, any other business might incur. And in this case, here's an example where you would incur it. So I would put that Schedule C, travel and lodging.
Awesome. Great. Let's see. What else? We have another question here. I'm renting out a room in the apartment I'm renting. Can I deduct the rent I'm paying from the money I make on renting the room? I also live in the apartment. Currently, I barely make half the rent on Airbnb. Now that Airbnb is charging me with 30% tax, I'm not going to be able to make even half the rent. What are your thoughts on that?
My first thought is 30% sounds really high. I wonder where this commenter is. But no, the comment is fair. So the comment is, often we have hosts who, instead of having a roommate, they rent out the other half of the room, and they're using that to basically supplement their living, but you're taxed on it, right? So not all the money that you take in is tax-free. It's just not. Even though you're used to having a roommate who, there's no tax implications, they pay half, you pay half. But here's the thing. You're earning income off a platform that has your social security number. So they're not paying the landlord, they're paying you, right? So the name of the game there is going to be make sure, okay, fine, report that income, but deduct the expenses, right? So if your rent is 1,000, the other half is 500, and okay, you earn 500, well, you can deduct the full rent, right? So you're at zero. But I think the second part of the question says, now that I'm not getting that 500, now I'm getting a 30% tax on it. I don't have all of it. I mean, I'm kind of curious on the details, but if they're talking about occupancy tax, which means that 500 includes the occupancy tax. The occupancy tax gets paid out to, the local government or the state. Then they're not keeping all that 500, right? So I would just say, okay, in that event, you've got to do what every other business owner does when they get hit with taxes, is they increase their prices, because you gotta be able to cover that. So I think the point is correct. And if you're going to make it work, you got to raise your prices. But be very clear that this is income, and you need to make sure that you're deducting, everything you can from what you're earning to make it all even out.
Awesome. One last question. This has to do with the bed tax or the lodging tax.
Yep.
So the question is, Airbnb does not collect and remit income taxes for us, but they do collect and remit the sales and lodging tax for us. Mm-hmm. Oh, that's a question mark, actually. Do they? So do they do that or not? My state has a total of 7% bed tax. It has to be filed quarterly. I'm listed on Airbnb and VRBO. VRBO allows us to charge our 7% and then shows the tax amount on each booking, so you can easily set it aside at the end of the quarter. I haven't been able to find a clear answer on Airbnb. What do you think?
What's the question? I'm just kidding. I think, this highlights an issue that a lot of folks are having across the country. And the issue is this, right? So every government is going to try and get their piece of the pie, right? I think Airbnb made $1 billion last quarter. This is growing, and governments are paying attention. And local governments and state governments, some states that don't have income tax are saying, how in the world do we get our fill? So what they've started doing is they've started assessing these, they call it different things: sales and lodging tax, bed tax, you'll hear occupancy tax, transient tax. But it's basically a sales tax, just the way that you would pay an extra percentage when you buy a candy bar at the store. Again, this depends on where you're at, but just an example. Sorry if it's a poor one. And what's happening is that the platforms are not consistent on whether they, number one, withhold the tax for you, and then number two, whether or not they tell you at all, right? So, I would say that kind of my advice to anyone in this space is, number one, check to see what the rules are in your state and city. If you're in a place like Texas, if you've got a state tax. If you're in the city of Austin, Texas, you also have a city tax, right? And get this, in Austin right now, the state Airbnb will withhold the state amount, okay, and pay it for you. So you don't need to worry about the state, but they won't do it for the city. So you need to individually calculate that yourself. So the answer is going to depend on where you're at. But yeah, you should be very clear on whether the platform is collecting and paying for you, whether the platform is calculating for you, like in this example, and whether or not you need to individually file. Another example, just to kind of throw everyone for the loop, the city of Los Angeles, Airbnb collects and remits the payment. However, the city still requires you to tell them what Airbnb paid for you. So this thing is a giant mess, and every city and state is going to have some differences and nuances. And we're actually working on trying to create some kind of a repository for all that information, but it's really messy.
Okay, well, I guess not a clear answer on that one.
Yeah,
but that's just what it is in Texas, right?
Yeah. I mean, and these examples are going to be kind of everywhere. So I think Nashville, Tennessee has kind of a similar arrangement. So it's going to be nationwide. So if your city doesn't have it, it might soon.
Right. And so Airbnb hosts, they have to file the taxes. Can they do it by themselves, or is it too difficult, or should they hire you?
Thanks for the opportunity for the plug. No, I think, look, I mean, I think that doing your own taxes is, it's noble. I think being able to kind of calculate all this stuff and wanting to do it, I think I appreciate. And I have lots of clients who come to me and they say, I can file my own taxes. And I say, great, but do you want my help? And the answer is usually yes. And the reason why is it makes sense to get feedback at some point, right? You want to go to someone that's seen 800 versions of the same puzzle. And that's what we offer. If you feel comfortable doing the math on your own, that's fine. But I will say that there's probably something that you haven't thought of. There's probably something you've missed. And if you're kind of like a great shining example of how to file your taxes, then, at least what you'll get is kind of the feedback confirmation that, everything's done right. I mean, there's a lot of math that goes into this. Depreciation schedules can be fairly complex. The occupancy taxes, how to deduct those and where to deduct those is going to be an issue. So, we think of ourselves as a resource. So even if, we have people we meet that are doing their taxes on their own, we hope that, there's probably a workbook or a webinar where we can add value and really educate the community on, how to set up a strategy, how to kind of plan using finance and tax.
Right. Awesome. So what would a typical tax preparation for an Airbnb host cost?
Yeah. So we're getting right into it, huh? I like it. So look, the space, we should be very clear about the space, right? So we are in a world now where if you do it yourself, generally a tax return on Turbo is going to be like $100, right? If you go to a firm that's going to do it in a major metropolitan city, your tax return might be $1,000. We fall somewhere in the middle, right? So I think our view is no matter what you charge, you should be able, and you should be clear, by the way, whether it's us or another firm, that whatever fee you're paying, you're going to get 3 to 4 times that value. So that's our view, and we generally charge anywhere in the middle of that range, and we're very clear on that because if we could save you $5,000 in tax, does a $500 tax return make sense? But again, it depends. We account for kind of complexity. We account for kind of being a startup, being your first year. So it depends. But generally, I mean, that's kind of the space of prices.
Awesome. Now, I know you have a special offer for our listeners. You're offering $50 discount on tax preparation. Let's see. People can go to sharedeconomycpa.com/getpaid. And if you fill out the form there, you can, what will happen? Like you'll get back to them. You'll give them a call.
Yeah, so we've got a team that is looking out for signups, and what will happen is a real human being will engage you and say, "Hey, how can I help? Does a 10-minute conversation make sense?" And usually there is a quick call or a quick email exchange about what you're looking for, what we offer, and if it makes sense to work together, we have a process to kick off the return and get it done within a week. We are getting close to the deadline, so I think for anyone listening in 2018. If you want to get your stuff together, you want to at least talk to a pro now and set up some kind of a plan, even if that means filing an extension and paying some tax. But the time is now.
Awesome. So for the listeners, sharedeconomycpa.com/getpaid. And if you want more information, I know there's a lot of information on the blog as well. So you can read about all sorts of stuff. You get a $50 discount, and full transparency, I also get a few dollars. Not nearly 50 though, unfortunately, but still it helps. All right, Miguel, thanks a lot for joining me today. Do you have any last remarks or tips for the listeners?
Yeah, sure. I always say make sure you pay your taxes, but don't leave a tip.
Okay, fair enough. All right, man. Great talking to you. Thanks a lot. And for the listeners out there, if you have any questions, by the way, on taxes, you can go to getpaidforyourpad.com. There's an article about it's kind of like the basics of taxes. If you go to getpaidforyourpad.com/taxes, you'll find the article and you can ask questions there as well. And I'll if I get a question, I'll ask Miguel to answer it. So because I don't know I don't know anything about US taxes. Anyway, thanks for listening, and we'll see you next time.
Get paid for your pad. Get paid for your pad. Get paid for your pad.